What's going on, guys? It's Marlon Conaway, aka Marlon the Money Coach, coming to you today with your financial literacy minute. And today, guys, we're going to share with you about 9 nuggets to help you move your financial house along in a major way. Man, first thing I want to tell you, number one, is this here. One of the major keys to finding out or how to put yourself in a better financial position is to find out, number one, where your money is going. You have to identify, hey, out of all the money I make, what percentage is going to taxes every month, insurance premiums, living expenses, debt, savings, right? You got to track your expenses, find out where your money is going so you can make adjustments and changes. I call them carburetor adjustments to put yourself in position. Number two, you got to build your financial house with a crack-free foundation. And see, your income is the engine that keeps your house moving. It's the engine that keeps your house afloat, right? And it's your life preserver. Without income, we can't pay our bills, we can't eat, we can't put a roof over our family heads. And number one thing you have to do is protect that income with life insurance. I always recommend to my clients, they should probably purchase 8 to 10 times their annual income in life insurance. Now, if your job gives you 1 to 2 times income in life insurance, that basically means you need to purchase the other 8 times outside of your job. All right. So if you can't afford 8 times, at least get enough life insurance to cover your final expenses, burial, to make sure that if you pass away prematurely, that your family can still maintain a roof over their head, maybe inherit the house debt free, secure your kids' financial future, maybe leave a little small inheritance or big inheritance, so they can go on to go to college debt free, or maybe start a small business when they grow up. But you want to have some type of foundationary strategy in place, okay? A life insurance strategy. And keep in mind, life insurance is the best kept secret to create first generational wealth in America. It's one of the most inexpensive ways to pass on tax-free generational wealth. So you want to definitely have a strategy in place. The next thing you want to do is determine if you're making enough money to live the type of life you want to live. So watch my fingers here. See, right now my fingers are touching, right? The ends of my fingers are meeting, right? We call it in financial terms, making ends meet. See, if you're only making enough income to make ends meet, so if this is your income and these are your bills and expenses and they're touching, all right, it's only really 2 ways that you can change it, okay? You can either A, reduce your expenses down, which could probably take time. Some people say, well, when my car is paid off, I'll have a little bit more financial freedom. Or once this student loan is paid off, I'll have a little bit more financial freedom, right? Because it creates a bigger little what? Quality of life or gap, okay? But the challenge is your car ain't gonna be paid off for another 2 or 3 years, right? Your student loans will be paid off in 10 years, right? So you wanna put your goals and dreams, your life on hold for that period of time, right? So the other way to fix it is to, number one, is to raise your income. Okay, so sometimes we have to make more money to create a financial gap, right? Or financial gap in our quality of life. And that's the quickest way to do it, because you can make a decision today that you're going to go out there and find something to do outside of your 9 to 5 to raise your quality of life. See, if your 9 to 5 is currently maintaining your bills, then your 6 to 10 should be helping you accelerate your life quicker, okay? So find something that you can do outside of your 9 to 5 job to bring extra cash flow into your house. And see, my recommendation would be to do something where you don't have to physically see and touch people, right? If you can find a way to create income online or using some of these different social media platforms to draw income in, it's a little bit better, more permanent situation. Because what happens if you ever get sick, hurt, tired, or just don't feel like it, okay, then you can't go see people, right? You can't go cut those grass or yards on the weekend, right? So if that's your only option, great, but try to find a way that you can make money while you sleep, right? Where you can make money without actually having to leave your home, right? Or go out and touch people, okay? And so, but do something outside that 9 to 5 to make more income. Next thing you gotta do is you gotta identify your bad attitudes and your bad money habits when it relates to money, okay? And so here's a bad attitude about money. Well, money ain't everything, right? Okay, you catch yourself saying, usually broke people say that, money ain't everything, right? Okay, well, listen, outside of God, your health, and your family, money's pretty high up on the list. Does that make sense? Okay, so start changing your attitude, because when you have those type of attitudes about money, it prevents you, they become demotivators they prevent you from doing what you need to do to put yourself in a better financial situation. What's bad money habits? Okay, every windfall of money you get, or every time you get a raise or you get extra money, you go out there and blow it on crazy stuff. Right? Okay. You just got a stimulus check. You bought some shoes in the bag, right? Or you got a pay raise. You got this bonus, and you went out there and took this trip. Okay. When you have things in place that you should be focused on that probably are more important, like a down payment for a home, right? Increasing your emergency savings. So let's make sure that we get out of those consumer habits, right? And being more financially sound when it comes to money. What's another thing we can focus on? A tip to building financial security. Number one, be brutally honest about where you could cut back. Yes, and I know y'all hate the B word, it's called a budget, all right? But you got to identify things that are flexible that you can change to reduce or cut back to free up money right away. See, certain things aren't flexible. Your car note is going to be the same every month until it's paid off, unless you go refinance or something like that, right? Okay. But certain things like your cable bill, how often you go to Starbucks, how often you log into Amazon and you put stuff in that little shopping cart, right? Those are things that are flexible. And so we have to get disciplined to start controlling, right, our thought processes, controlling our budget. I call it build a bulletproof budget. Sometimes you'll realize when I'm dealing with some of my clients, we've saved clients $200 a month just by looking at their budget, right? $150 a month, $300 a month, just by cutting back little areas, right? You don't have to go out to eat 4 days a week. Maybe just go out 1 day a week or every 2 weeks, right? Treat yourself, okay? And we gotta practice some sound habits and create some discipline. And starting your budget can help you find money right away that you can use for other more important financial things. Pay down debt. Right? You have a lot of debt, student loans, credit cards, things that are unnecessary debt, I like to call it. Pay that stuff off ASAP. I think there's really only two major debts that are probably necessary for most people, and that's a debt when it comes to our transportation, because most people don't have $20,000 in the bank or $18,000, $30,000 to go ahead and buy a car cash. Most don't have $200,000, $250,000, $300,000 to buy a home cash. So sometimes those are necessary debts. But going to buy an outfit just because it's on sale, or taking that unnecessary vacation, or and charging on your credit card, I'll pay it later. Those are things that sometimes we have to practice the word sacrifice if we want to be better off financially. Okay, and so you cannot practice being financially independent or being financially free, but also incurring debt, right, on a monthly basis as well. They don't go together. Building emergency savings, that's the next tip. All right. You want to set aside maybe 3 to 6 months of expenses for just in case. They call it a rainy day fund. Just in case what, Marlon? Well, just in case I get laid off from a job, right? Just in case I walk out the house tomorrow and my car won't start. I need to replace the battery, or the transmission goes out, right? Either A, I'm going to fix it with cash, or B, I'm going to fix it with credit, which basically means I'm never going to be debt free if I never establish an emergency fund. All right. Invest wisely. All right, is the next tip. All right, you want to invest wisely. All right, and when I'm talking investment, I'm talking traditional forms of investment. I think number one, you got to take care of your traditional things first, like your 401ks, your Roth IRAs, home ownership, annuities, and different things like that before you start trying to get too fancy and sexy. See, right now everybody's into the cryptocurrency thing and the forex trading and stock trade. Those are great. But take care of the foundational principles first, okay? You want to be taking care of, number one, your emergency savings, which is right now, all right? Maybe you may have a midterm savings bucket, maybe for your house in a couple years, or you may want to upgrade your car in a couple years or whatever. And then you have your long-term savings bucket, which is your financial freedom bucket for 65-year-old Marlon, right? You want to make sure you're putting money systematically away through your payroll deduction programs, through your bank drafts every month on autopilot, more of a forced savings type situation where, hey, it just comes out like taxes. See, taxes, we don't have to think about paying taxes. Uncle Sam got smart enough to know he's going to take those taxes out of your paycheck, because he knows that it hits your hand first, and you have to decide, whether you're going to budget that money to the side to pay him later. You probably won't do it. Okay. And so that's why I believe in making sure we take care of our traditional type savings vehicles first, put it on autopilot where we got maybe 10, 15, 20% of our income being set aside for our short-term, mid-range, and long-term savings like our retirement and so forth. See, all the other sexy stuff, you do that after. See, if you're spending all your time stock trading, cryptocurrency, and all those different things, and don't have your foundational things in place, you're probably not going to put the money aside when you make that profit. See, when you made $1,000 off that trade, you're probably not going to put money aside for your retirement. You're probably not going to put money aside for your emergency fund. All right, it's almost like the tax concept. All right, you're going to either reinvest it all right, or reinvest half and spend the rest. You're going to say, hey, I got an extra $500. I'm going to go buy this new suit because I can make more next week. That's the mindset we have. Okay, so those things are great, but make sure you have the foundational investing and savings plans in place first. And that way, when you're doing those other things, whether you win or lose, it doesn't matter. Okay, because you took care of home first. That makes sense. They always say, don't gamble or risk what you can't afford to lose. That makes sense. Okay. And so lastly, we got to break the systematic teachings when it comes to our children and how we educate them about money. Okay. And so we got to start teaching them all those different things early. The things we learned later in life as adults, we have to start teaching our kids like ASAP. Right? Some of the different principles that we just talked about today, start working with that on your children. As soon as they're able to understand or ask for money, start teaching them. Okay. And so for some of you guys here on the line that are very serious about money and educating your family, I want to give you guys a quick offer. I want to send you guys a free ebook. It's a parent's guide to teaching children how money works. Okay. And so if you, whatever platform you're on right now, if you want to text me or DM me or what have you, and say, hey, invite me, right? By showing up to my next financial literacy session. I do them all online, Zoom. They're all virtual sessions from the comfort of your own home. Just log in with your tablet, your laptop, whatever. Okay. By opting into my next session, we're going to send you that as a free gift for attending our next webinar financial literacy session. So guys, we appreciate your time, your attention. If you ever have any questions about anything we share with you today or need personal coaching or help, reach out to me. Make sure you follow us on our social media platforms. You can follow my business page at Legacy Builders, then M Conaway in parentheses, MCONAWAY in parentheses. That's our Facebook business page. And on Instagram, you can follow us at Team Legacy Builder 904. That's our business Instagram channel to find more tips on money management, money principles. So guys, we appreciate your time. We'll talk with you on the next video.